We are recording. So we're going to present a few key techniques that I use every day in my trading that I do not violate from, that I do not deviate from in any way, shape, or form, because this has to be a process that every trader goes through in order to get the maximum amount of profitability out of your trades. So the first thing I want to cover is we're not living in an isolated market, people. If we're going to trade ES, we're not just looking at ES, we're looking at the equities, and we're looking at a lot of the other factors that may affect your marketplace. Okay, this is a chart of ES right here that you're looking at, a daily chart with the volume in a subgraph below with a simple 21 period, simple moving average. And it's overlaid right on top of the volume. Every day's total volume, long, short, net neutral is all computed, and the closing price is considered to be the price that the world has decided that this is what this instrument is worth for this given day. So we begin, if we're going to be trading, for example, YM, my primary market right now, I'm going to begin with ES and look at the big brother here to see what I need to determine whether I'm going to be long, short, or net neutral for the session. Long being I prefer to trade long, short would be I prefer to trade short, and then neutral would mean in a real-time arena, good setup, I would be willing to be short, both short or long, depending upon how the real-time trade setups come through. So right here, I want to make note of the fact that on ES, we had a major POC. For those of you who are not familiar with what a POC is, it is a point of control. And in this case, going back to this bar right here on 5/5/2022 was one of the strongest POCs that had been created in quite some time because of the extensive volume on the bottom here. And it also had an alineation with 1, 2, 3, near 5 different data points at the same level. So we knew that this was going to be hard to get through. And we also knew that if it did, we'd have to have a lot of volume in real time in order to consider going long, considering the fact that we had superior resistance at this point in the form of this POC that began, again, for the first third of that bar down on 5/5/2022. So the first thing we want to do is we want to look at the relative comparison of the volume as compared to the prices, okay? Now the prices have been trading up. We got through this resistance level here, which was basically at or near 42.10 and 25. At that point, we're drilling up into this POC here and looking to see if we're going to get through this or not. Yesterday, there was a nice move off of that to the downside. And then today, to go a little step further, even though the volume had dried up, we're going to take a look at two different money flow indicators. Traders, I cannot send this home enough that we need to look at two different money flow indicators with two different time frames, with two different mathematical calculations, so that we have both a long-term view and especially a short-term view. So let's begin with going right from this chart to the MFI indicator, the money flow index, and here we are. The money flow index, calculated with a 14-period look back, is compared to the prices here, had a small down tick. Now this is the very first down tick this indicator has had in 5 sessions. So we're looking at, 5 sessions where this indicator has consistently daily traded up. And now, because of the new overnight session kicking in last night at 6 p.m. Eastern Standard Time, right, a minor down tick. But let's take a look at everything else and see what we can come up with. So now we have a very short-term view of what the smart money, the largest institutions are doing, right? This is what we need to get under our belt first. So in this case, looking at this indicator in isolation, I might be inclined to go net neutral, possibly still long for the session. Maybe short if there's a great real-time setup, but I'd rather be long instead of short still because of the 5 consecutive bars up. Now let's take a look at long-term money here and take a look at the chicken money flow indicator, 21 period look back, different mathematical calculation. Using this technique here, okay, I can see that I'm off of a through and I'm now through a peak on the current session, right? This is yesterday. When the overnight session kicked in at 6 p.m. Eastern Standard Time, this is just about where we were. We had a penetration here. So this is now saying something entirely different than what the short-term money is saying. So would we discount the fact that there's a minor downtick? No. Would we honor that? Yes. Would the wait be to continue to trade to the upside? Yes, if in fact enough volume comes in a real-time trade environment. From here, we're going right to the CO, which is the Chaikin oscillator, and we have 3 upticks with no look back after a trend line violation. To cement this home, flying in an F2 and a horizontal trend line, we are also through right here, the most recent peak on a test here through this internal level, which is associated with these prices. So this indicator is leading. Traders, the true value of any indicator is its ability to lead prices, to predict future directional price movement, and especially in real time. What we're doing here is we're looking to come up with, on an end of day basis, charts updated in real time with a market call. Am I going to be net neutral, trading short or long? Am I going to be long or am I going to be short? We already discussed that, but the preferred mode to be in for today was still long. Okay, so we have an end of day bias that we're looking to get a market call. On our end, it's actually, we developed what's called the smart money bias market trading call to be able to come up with a current stamp of what is the state of the US market every day. Every day. And we're trading just using technical analysis and no news whatsoever, because the technicals discount what the fundamentals are saying. If you're a fundamental trader, including it with your technical analysis, I would highly recommend that you discard that and let the volume, the money flow indicators, and the CO, and now the SMI, Stochastics Momentum Index, and determine what is the current state of the US market. So here we have up again, even though we're in overbought territory with the SMI, which I think, in my opinion, is one of the best price-based indicators that was ever created. This is a custom SMI that we use over here in one of our proprietary indicators that we use end of day and obviously in real time. After that, we're going to the MACD, and we can see that the trend is still strong to the upside. So now that we have done a quick and dirty analysis, cutting right through the chase on ES, let's go into the next market, our primary market, which is YM. Change workspaces right here. Here's YM daily. Now, you notice that we also have a volume dry up here, okay? And we're also yesterday away from this POC right here, again, based on this price point area. A little different. Numeric value is obviously different as well, but they are similar, meaning that the markets that have laid out these levels, both ES and YM, have a match here, and they are moving in parallel so far with the consistent up days that we've had since we got through this level that I just mentioned on ES that was previous to the breakout above, in this case, 33,959 on today's action. So all the daily levels are laid out above the prices, and this is the way it has to be because we have to have clear levels that we can extrapolate over onto a 1-minute chart. Because the 1-minute chart, believe it or not, is the time frame that we're going to trade off of. So all these levels that are here, and this is what we teach, how to find these, plus the incrementals in between from the highs and lows. These are just the major daily levels and a 50 in between here and here, right, as a measuring point for a retracement up or downside. All have to be extrapolated over onto the 1-minute chart. And as we get that far, you'll see exactly why it acts as one of the greatest confirmations to be long in this case or not. YM near contract month, 9/22, end of day chart updated in real time. Same process, people, right through here, right into the MFI, minor downtick again. Okay, but not through the internal level here yet, which was created by this inside fold at this point. Still clear to go long? I would imagine so, based on a good real-time setup. Getting right through that and looking at Chaikin money flow, we have another confirmation here right? This was yesterday and this is today. So now we have two different markets moving in parallel. The long-term money is obviously in for the session, right? So the baton gets handed off on a one-day basis from short-term to long-term money. And our bias that we have created for the session, preferring to go long, is valid, objective, and can be used in real time in order to trade profitably. Can I get a raise of hands, everybody who understands what I've laid down so far? Okay, good, excellent. So here we are, getting through the CEMF, and the same thing, looking right into the next indicator, CO, couple upticks here. So that's a positive for the long. The Chaikin oscillator is obviously an accumulation distribution computation that is associated with the MACD indicator. So you're not going to get the same signal out of this. So we have to begin with the MFI, the CMF, and the CO. Now we have two different markets with all the same indicator changes that have happened from the previously closed out session to the new overnight session that began last night at 6 p.m. Eastern Standard Time. And again, the closing price of every one of these days is what the sum of all market participants have decided that that is what this market is worth at the end of the day, literally. Well, in this case, based on settlement prices. So going right through here, let's take a look at the SMI. Here we are, overbought territory again, right here, but definitely in an uptrend. We have not crossed from above to below yet, excuse me. It's been a long day so far, up since 5 o'clock and running. Yeah, exactly. And then we're moving into the MACD. Everybody understands this indicator from Appel. The standard parameters around this, the SMI in this case, which you just saw, is also proprietary in this market as well. So, how are we doing for time? We are good. Let's move into YM, a real-time workspace. This is my real-time workspace that I'm using every day to trade off of. Now, remember the key levels that we had for resistance on ES and especially YM, okay? Okay, because here's where it is. The key level that had to be broken and traded through, this was laid out this morning before trading, okay, was getting through the open of the down close from 426.2022 and getting through the close of the up close from 5.4. That's where all that superior resistance level, that POC, was located both on ES and YM. So before we talk about how to get in, once we're above these levels here, I want to cover something that a lot of traders need to get demystified before they want to consider trading as a professional. I'm looking at this price chart pattern uniformity here, right? And it's not bad. Could it be better? Yes. Is it very good? Yes, it is. Because this is the way things were when prices were moving in a channel at this time. Traded down, moved sideways, the market opens up on strong volume right here, pushes up, gets a test above the previous session's close of the up close. This is critical. It closes above it. That number was 33,873. Okay. Then we're into program trading where the volatility is much higher. Does everybody understand what program trading is? Basically, orders that are generated by programs that are written by algorithms, which, in my opinion, nobody should ever try and trade when you realize that you're in program, because it is extremely dangerous, extremely hard to identify high probability trades the way we do here when you have this kind of erratic price behavior here. Once you get out of here and you got through, okay, this previous session's close of the up close, within a few bars time, I'd say right about at this juncture for sure, you knew you were into program trading. So there's no sense in doing anything until you get out of it. So here we are, much higher volatility, much more difficult to trade. Even myself, if I was going to trade, I probably would have been short below here at this point and maybe taken some of this. But these kinds of data points here at this juncture, right, with all the other bars mixed in and the high highs and the low lows, are extremely difficult to be able to count on, because if you look at this price activity here, right, yes, on higher volume, but in the overnight session, copy me, here we are, nice interlocked stair-stepped up bars that once the market decides to sell off, okay, have a much, much greater probability based on the price chart pattern action. The price action is called in isolation to be able to get back down to any one of these levels. And you got right back down to the open of this bar here. So I'm going to hammer home the point, people. Don't ever, ever think about trying to trade anything when you're in program. You have to wait to get out of it. So then the question becomes, how do I know when I'm out of it? The volatility reduces, price chart pattern uniformity begins to take shape, maybe 3 or 4 bars, 2 bars after you get above, in this case, a major point of control level that's associated with the close of the up close of 5.4 and the open of the down close of 4.26.2022. Okay, so what happens? Volatility remains here, but at this point we start to get a change and we're above again, looking for another double top come across. It does. Things turn back around and then things start to change. Look at 1, 2, and the third bar. We are out of program trading. Out, like as in here. 1, 2, and I'd say beginning of this bar, I would imagine that I would call it out of program trading. That's how you know. It doesn't always happen exactly like this. I'd rather see smaller range bars and interlock with no breakaway gap at all. That would be the preferred animal that I'd be looking for, but this is good. So now the question becomes, how do we get in at the right time? How do we get in at the right time with the highest probability of the trade following through? This is the question. And the answer is, we not only want to get above the close of the up close in 5.4, we want to get this high taken out, this high taken out, and we want to get this high taken out. So let's go back and let's look at on a 1 minute level here, which is the way I do it. F3. This is a proprietary BTC line labels indicator. As you move above the prices, wherever the prices are trading, or below, it changes from support to resistance, right? Okay. So right now, since we're still below where the price is trading in real time, we're in the support mode. Okay, so let's connect it to this high right there. And we need to go up maybe just a little bit higher and take this one out. I would say so, because we don't have the third bar of uniformity. And so I'd probably go here and connect it to this high, right? And then I'd be looking to get in +2 or +3 above that last final nail in the coffin, people. This technique can save you so many trades that you're getting stopped out. It's almost uncalculable. Everybody's getting stopped out here. Everybody's getting stopped out here, left and right, because they have orders above and below the market and limit orders. What's another technique that I use? We probably covered 5 so far. We're going to go with 3, right? What is it? We want to make sure that we have any real business trading at a certain place of time, and that our entries are above anywhere where we could get stopped out again. So we make sure that we have the utmost opportunity to get to, and here's the key, follow through to another price profit target. All right, so let's overlay this right on top and go +2 or 3 ticks above that level. This was the best preferred entry that any trader could have gotten on this trade. Been around the block and knew what he was doing and how to place the preferred entries, not with the limit order, with market orders. Every time I see this happen here, I see this happen here, I see this happen here, I feel bad for the traders who are uninformed and are using limit orders because they think they want to get the best fill. And the smart money is going to run the stops every single time because they want to pick up a couple $1 million and say, thank you very much, see you later, and another herd of cattle into the slaughterhouse. That's not the way it works here. It has to be a highly calculated, bold move with a high probability, greater than 80%, more like 90%, in order to take a trade with a strict trade selection qualification process that we teach here. Otherwise, it's not going to be taken. So the question becomes, how do we know where we're going to get out at a predetermined price profit target? Well, I'm going to pull in my daily chart here for a minute that I have in my real-time workspace, right, which is on another monitor. And for those of you who have YM open, right, you would have known that some of these levels here that are above the market. One moment. This level right here at 34,129. You know where that came from? I'll show you. 34,129. That's drawn from the close of the down close from 4/12/2022. You know where this one came from? A low. Where these came from here, lows or highs. So when we do this, we copy and paste these over into a 1-minute chart, right? And we use them as price profit targets to get out that are laid out, well calculated by the previous daily levels, open, closes, highs, or lows, right? To be able to determine, where we can lock in a profit, get out. So now I've just identified leg 1, leg 2, and leg 3 ahead of time. Now, most traders that have been around the block realize that leg 1 is the easiest one to get. And that's what we teach our people here first. Go for the first leg. I don't care if it trades up to the moon, because your job is to log in a profit. This is what the most important thing has to be when you begin to trade using a methodology this strict. So we have a few minutes here before we get into a 5-minute question and answer scenario. I want to cover again where would we get in again based on your second leg. This would be your high, so you're going 2 above there, right? And you'd be looking to get in, I would imagine, like Jeff Kilian just stated, a few ticks above that level, and then ride it up to here. Failed try to get to 34083, but as soon as price is turned around, you're out. So here's leg 1 done. Have to wait. Some of the proprietary indicators that we use here, like the VTC 21 period VMA, like our VTC histogram 5-second, which is identifying with the smart money, like our custom level 2 indicator, which shows the orders above the market, right, that are limit based, that some order institutions, institutional orders are placed at, right, get gobbled up, and then the prices continue to move up. So at this point, we have everything laid out ahead of time. We were waiting for what? The volume to come in to make the statement. And as we move over here, I want to present exactly the type of volume that we're looking at when we were looking at it. And it is right here. It was right there, an accumulated volume after the dry up, after a single volume spike, and a volume dry up here after the sell-off. So once again, in every seminar, in every article I've ever written, the critical nature of volume, how to find, track, and trade, the smart money, the guarded secrets of the world's greatest traders, whatever it's been, right? It's always the focus to reveal where these people are trading, when they're trading, and when we have any real business trading or not. You see, the key to longevity in trading as a professional is not necessarily the home run trades. It is risk mitigation, because without it, well, you're just eating into your profits. And I imagine there's a lot of traders in this room right now who've gone through that. I feel for you. We can help you. I'm confident of that. More than confident. We've helped a lot of people get through a lot of things. A lot of traders have been around the block a long, long time, 5-10 years, but they just haven't figured out How do I pull the trigger at exactly the right time, at the right place, with a lot of confidence and conviction like never before, and be sure that I'm trading backed by the largest institutions, aka the smart money. Takes time, takes good training, takes dedication. I have a question that came in. Okay. Okay, the question is from Joseph. Um, Joseph says, what's the best possible way to get a lot of this under my belt? Well, the obvious answer is trading course. I mean, that's 30 years of accumulated knowledge laid out in 7 different modules on the website, the S&P 500 mini trading course. It's $1,500. It was like $2,700 in live. No doubt about it, there's nothing else like it out there. For those of you who've been tracking us for some time, and anybody who's in this room, I believe has, or you wouldn't have been invited. I don't mean that egotistically. This is a very select list of people today. It's not out to the entire public. Know that we have countless real-time trades unedited in real time as they were taken by me, right? And that we're totally transparent, honest. You know, in the most recent Metastock webinar, I clearly said, and I'll say it again, the words like integrity, transparency, honesty, okay, they still exist on this side. It's the way it is. We know who's out there trading. We know what's going on in the world. So I have a question. It wants to know what's involved in the mentorship program. Well, the most important thing in this case is that you have to have some experience that would be better. And you have to have seen it with your own eyes that there's mad money to be made out there. And you have to believe in yourself. And you have to be a person who can make decisions. You can't wake up one day and decide to do one thing and wake up another day and decide to do another thing. You have to wake up and say that, okay, this is what I'm going to do. This is it. And no matter what I have to go through, what I have to do, this I'm going to make happen in my life. No look backs. Stay away from negative people. Don't go near them. Don't go anywhere near dream stealers. Take that dream and turn it into reality by visualizing every day. This is what I want. This is what I'm going to do. Put it all over your walls like I did. It's easier today. 25, 30 years ago, it was impossible. I was seeking out people all over the world who would talk to me. People who were famous. Some of them are dead now. They passed away because of the time, right? And what I had to go through was extremely difficult. Extremely. It's easier now. They have companies like us. Very few and far in between. I don't think there's anybody that can touch us. I'm pretty sure there isn't. Who are willing to impart the information, to empower a trader with the information that he or she needs in order to make this happen the very best way possible. So mentorship programs, I mean, they cost money. I mean, I'm sure that, you know, all professional athletes who have mentors, I mean, most everyone has paid a fair sum for them, right? But they got the right guy or they got the right girl. And they were mentored, downloaded with the right way to do things, whether it was Tiger Woods, Tony Robbins, Kobe Bryant, Michael Jordan, right? They all had mentors, every single one of them. I can't think of any top name today in sports figures, lecturers, speakers, motivational people that didn't have a mentor. Who was Robin's mentor? I think it was Jim Rohn, right? Am I right? I think so. So I'm going to send this link out to you, and I want you to take a look at this, right? I want you to take a good look at this. There is no obligation. The only obligation there is the one that you have to yourself in order to make a decision, try something out for a very small sum of money. After you're finished, you have an hour with me. Troubleshoot you out personally. We can record those sessions if you need it, right? Because everybody has questions. And so I'll get this in here. And those of you who liked what you were hearing today will take advantage of this and take advantage of what we have to offer here. It's in the chat box right now. It's a link to the S&P 500 mini course. So I think we're out of time. Everybody's busy, including myself today. We're completely slammed here. Before I go, I want to fly in some of these numbers here from my last couple of days of trading so you can see how I did. And here I am. All winning trades, one losing trade. Okay. And the last few days here, light trading, $5,870 brought in, right? From the 15th to the 17th, and the day's not over, but I'm through trading for today. Okay? That's it. That's it. Transparent. I think that's the most important thing here. So I'm going to leave this room open for a while for people who want to take advantage of that link, and I'm personally going to sign off. And I hope that all of you have an excellent day wherever you are, and we thank you for being with us. If there's anything you need, please reach out to us, and we will make sure that we take you seriously as we take every client seriously and work on a shared commitment at the highest level, because that's where it's at. It's always that way, and it will never change. Okay, everyone, thank you, and we'll pick it up on the next vid. This is probably published to the world tomorrow. Thank you for being with me. Yeah, I think so.